Let's get right into this week's Forex forecast. Everybody, welcome. Looking at the US dollar first, I get that the fundamentals may be bullish for the dollar or whatever based off of the war and everything. But look, I've been pointing out this weekly demand that's inside of this monthly demand for so long now. And that is why I've been saying, because this monthly demand is in control, the black dotted lines, I've been saying we could easily see a push up to the dollar, up to 103.06 on the US dollar. And so far, we are getting such a nice move on the DXY. Looking at the daily chart, I've been calling out this move to the upside on the DXY. I've been talking about this liquidity and this daily supply ever since the dollar was down here. Feel free to go back and watch my previous forecast to confirm that I was saying that. I will admit, I did think we would see somewhat of a move off of that supply, and obviously we just blasted right through it due to the whole war that is going on right now. I'm trying to be careful with my words, but I did expect to see a small move off of this zone. We didn't get that. Obviously, it's when we get crazy spikes like this, zones will just blast through. So now the big question that we've been talking about is, will we be pulling back down to this daily demand at 97.88? I personally think we probably will. I think we will be kind of, if you just think about it, like we are refueling down here for longs to then push up to that weekly supply that I was just talking about on the DXY. And technically, we do have some sort of trend line here on the daily time frame as well. So it's looking pretty bullish for the dollar. Again, the question is, will we be pulling back down to this demand zone? And to understand if that's going to happen, we are going to have to take a look at the lower time frames. I definitely see evidence to suggest we will be doing that. Let me just adjust this trend line here. I forgot to adjust it. Boom. And the evidence I'm seeing, there are basically two pieces of evidence I'm seeing to suggest we will be getting a pullback on the dollar. If we throw a channel tool on this trend line, look how overextended we are here. Very overextended. We're not even trading in the channel. We were trading above it. We are pushing back into the channel now. So I'm saying we are very overextended here on the 4-hour chart. That is one piece of evidence to suggest that we will be pulling back on the DXY. The other piece of evidence actually happened here on Friday. We had a nice little 1-hour trend line, and that trend line was very cleanly removed with this supply. It's not a great supply zone. It's personally not one I think we will see a move off of. It's possible. It's just not a great zone, but I'm going to have it on my charts anyways. So the fact that we have broken this trend line is definitely evidence to suggest we will be going lower. The next thing we will be looking for is this lower move. So make sure you copy this on your charts, copy that low. If that low gets removed, we will then have a downward trend. And that to me will suggest we will be pulling back on the dollar. We have a demand zone down below at 98.27. That's a pretty decent zone. I think we could see somewhat of a move off of that. So for now, seeing evidence to suggest we will be pulling back on the dollar, but again, I think it will be. I think the pullback will be short-lived. Don't get caught up in the hype. Oh, the dollar's tanking. The dollar's tanking. Look, we have macro, monthly, and weekly demand in control. If we start to get a pullback on the dollar, we're most likely just pulling back down to that daily demand, where we then get another move to the upside. All right, on to the forecast for the Euro US dollar. Let's start with the daily chart. Obviously, we blasted through this daily area of demand here. We did get a long trade there before, but we did blast through the zone. Now, where we could be headed is down to this daily demand. And what do you notice before this daily demand? A clear area of support down below. And I think we will see another reaction off of that, maybe a move down to the daily demand, and then maybe get a move to the upside. But we do have a nice daily downward trend line right now. We do have a daily supply above that we could be pulling back into at 1.17. I know people aren't really trading the daily chart, so let's go down to the lower time frames. But first, just want to shout out everybody for continuing to watch these forecasts, as I just did another donation because all ad revenue from these weekly forecasts is donated to my local hospice charity. So make sure you hit that like button, subscribe to get more people to watch these videos so we can make more larger donations. Thank you, everybody. Much appreciated. So as far as trading the euro goes now, we do have that 1-hour demand zone. It's just obviously the inverse of the DXY supply that I pointed out. It's mediocre at best. I do like the rally-based rally zones. I prefer those, or the drop-based drop. I do much prefer those. I also prefer a single candle basing. So on that note, it's actually a decent zone. It is removing the trend line. We still have 24 minutes for this candle to close above the trend line for it to be removed, but I am prematurely drawing it. I think it's fine. So if you are bullish on the euro, that would really be the only setup I'm seeing right now for long trades at 1.15. Since we have a daily downward trend, I think aggressive trade management would be good here, meaning move your stop to break even if we get a small move, or if we get a small move like this, look to bump your stop and to take profit or to take 80% of the trade off, whatever you got to do, back test what you should be doing. But I'm just saying we shouldn't be looking for a massive trade from the zone. Could it happen? Sure. I think it's low odds that we're going to see a massive move. So I think it could be good for a small move to the upside. What we also could be seeing is a pullback up to this 4-hour area of supply. Drawing it was a little weird. I did have to tighten it up just a little bit here, but it's a decent little base drop zone. I like the move away. Look at how good that move away is. It removed opposing demand, and that is our zone at 1.16. So if we do see a pullback, it's within the trend line on the 4-hour chart. That will be our supply zone for a short trade. It's a pretty good zone. Don't love that here, but again, the move away is very, very good. So if you're bearish, I would be waiting for that supply zone to be hit on the euro US dollar, and that's really all I would be doing right now on the euro. Alrighty, on to the forecast for gold. Gold has been crazy lately, obviously, with everything that's going on in the world. Again, I'm trying to be careful with my words here. I don't know if YouTube's banning certain words or whatever, but obviously, we're pretty much sitting at the high. It's a great move away up here. I didn't have supply up here based off of my chain analysis, but obviously, we are seeing some sort of move off of that little rally-based drop here. So buying gold right now makes me nervous, but we will be trading with a daily upward trend. More importantly, a weekly upward trend and macro upward trends. We actually have two decent little setups here on gold. You guys know I like to point out both sides of the equation. You can see we had a trend line coming in here. That trend line was removed on Friday with this area of demand at 50.87. The zone itself is mediocre at best. It's not like amazing. It's not really standing out to me or anything. But if you are bullish on gold, the only setup I'm seeing is at that demand zone. And, you know, we are sitting kind of close to the high, but I mean, if you look at where the actual high is, there's really tons of profit margin to the upside. So I think we can be a little less aggressive with trade management here. 2-to-1, 3-to-1 is possible. Maybe just do a hybrid trade management where you move your stop up with price. But that is our demand zone for a pullback. The basing's decent. The move away is pretty good as well. I like it for a pullback entry long on gold. Where we might want to look to take profit on that long trade is up to this 4-hour area of supply. You can see we had this upward trend line removed. That upward trend line was removed by this supply at 52.75. Everybody was buying gold because of the whole war, right? Buy gold. It's such an easy, what an easy trade. There's crazy times going on. We've got to buy gold, right? Well, you need to look up the term priced in, and that's what happened here. Everybody was buying, and we got slammed with a move to the downside. But on a good note, we have a beautiful drop-based drop supply. Single candle basing, kind of a hidden zone. I absolutely love it at 52.75. The only thing I don't like about the zone is the fact that it is counter trend to the higher time frames. So if you want to trade at this zone, I would be pretty aggressive with trade management. I think we could see a 2-to-1 move off this zone. I think that's reasonable. But, you know, if we do get a 1-to-1 move, you probably want to put your stop at break even and just kind of free roll the trade from there. I definitely wouldn't be, you know, targeting the lows down here or even the lows here because, again, I think we could see a small move off of it, nothing crazy. And then, so that would be our supply zone for a short at 52.75. If we break that supply, any demand there will be our long entry. So that would be the preferred setup to see that supply zone remove. But at the end of the day, it is a good supply zone on gold that we could be trading for a quick little short trade. But remember, look at the higher time frames. We are clearly trending up. Moving on to the forecast for the S&P 500. I've been talking about how we are pretty much sitting at the high of this channel and we could expect to see a pullback. So, you know, this whole thing that's going on in the world right now, maybe it's just an excuse for price to push down, but we were pretty much calling the move to the downside here. If you go back and watch the previous forecast, I had the supply zone on my chart, and what a move off of that supply. It's 69.47. That's a beautiful thing of my forecast, guys. You can go back and check to see for yourself because videos that are posted on YouTube cannot be edited. So obviously I was pointing out that zone beforehand. It's actually a pretty interesting chart. On the 4-hour chart, we are targeting this liquidity right now. You can see a couple moves to the downside off of that liquidity. Where we could be headed is down to this demand at 66.48. Since we could expect to see more downward pressure, this zone is pretty good. But I wouldn't be looking, typically when we're trading the S&P 500 indexes, you can look for massive trades because you're always trading with the higher time frame trends. But since we're so overextended and considering everything that's going on, I think this zone could be good for a quick trade, maybe 1-to-1, maybe a 2-to-1 trade, maybe a trade to trade back to the trend line and then look to take profit. So based off of all of those conditions, it's a good zone. You can have mark it out on your charts at 66.48 down to 66.12. I think it could be good for a small move to the upside. I wouldn't be getting too greedy with profit taking there. I just think it's good to maybe move your stop to break even because, again, we are very overextended on the weekly. Daily supplies being respected, that's definitely a sign we could be headed lower. As far as trading it goes now, on the 1 hour chart, we do have a very nice 1 hour downward trend line. Let's throw a channel tool on this trend line right now to see what is going on. You can see we have the channel, we are below the 50% mark. So I think if you want to day trade short on a 5-minute chart, wait for above the 50% mark to trade closer to the trend line, and you could be doing that on a 5-minute time frame. If you trade the 15-minute time frame, which I know some of you guys do, you could be looking at this 4-hour trend line to the downside. Let's throw a channel tool on that to see where we are. Again, we are below the 50% mark. So I think waiting for above the 50% mark to trade near the trend line would be better to trade short on a 15-minute time frame. And I mean, let's say you get an entry here, right? Let's just say you get a little 50-minute entry here, decently wide stop. Profit margin down to that demand is like a 3-to-1 trade. If you want to be more conservative, take profit before. It's like a 3-to-1 trade. So there is profit margin to the downside. Typically, I don't love shorting the S&P 500, and I personally don't day trade anyways, but if I did, it's reasonable here based off of the trend of the downside, the fact that we have daily supply and control, and the fact that we have a very, very clear profit target to look to take profit before we see that spike up from that zone potentially. So there is profit margin to the downside. We have nice trends. There is evidence to suggest we could be going lower. So I think right now we could be shorting. Just wait for somewhat of a pullback because we're kind of shorting at the low right now. So I think we got to be a little bit patient, wait for somewhat of a pullback, continue to trade short down at that demand at 66.48. And then from there, we could switch to a potential long trade and get a quick little swing trade, 1-to-1, maybe a 2-to-1 trade off of this 4-hour demand zone from back here on the S&P 500. On to the forecast for the USDJPY. We're going to start with the 4-hour chart here first, and the reason is because we got a beautiful, quick little 4-hour supply zone trade from this supply zone. You can go back, watch my forecast. I've had this supply zone on my charts for so long now. We've been patiently waiting. We had a nice area of resistance before, and when we came back in to test it, look at that. We basically reacted off of it, pushed down, then pulled up to our supply. So that was our entry, and this trade was called out before it took place in the daily market breakdown video, which you can see on the screen right now, which is a forecast I do for the members every single day. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So I took this setup, and then as we were down here, I was talking to the members in the next daily market breakdown video saying, I think we could be pushing back up for 2 reasons, which I will go over now. Reason number 1 is we had a trend line in control. The trend line was originally drawn here, so we had a trend line in control. So that was one reason I put my stop into profit, and then I ended up getting stopped out for a profit. So I didn't get as much of a move as I wanted, but I did make a good judgment call saying I think we're going to be pulling back up to the supply for another reason I'll show you here on a daily chart. So I did move my stop into profit, and I did get stopped out for a profit, and I'm glad I did so, because if I just left it at break even, I'd be at break even. So I made a little bit of money based off of my higher time frame charts. So for one, I thought that trend line would pretty much come in control here and push up. That is one reason. The other reason is because on the daily chart, you can see on Friday, we did contact that supply. But we didn't contact the supply when I was in that 4-hour supply zone trade. So reason number 2 I thought we were going to continue to go up is the fact that the daily supply was above and we didn't hit it yet. We finally hit it here on Friday. So now we can see a little bit of bullish or bearish pressure coming into the market here as we've contacted 158.09 at that daily supply. Now, I don't think we're going to see a move like this. I really don't. I think we will see somewhat of a small move. Ultimately, I think we will see a small move and a move to the upside, breaking that daily supply. It's a good supply zone, but the fact that we have liquidity on the weekly chart above as well tells me we are most likely going to break that supply. So those are the 2 reasons that I closed that trade early and moved my stop in to take profit. As far as trading it goes now, we pretty much have one option and one option only. Since the daily supply is in control, you usually want to look for confirmation on the 1-hour chart, but I am not seeing anything there. So we will just use the 4-hour chart for our analysis. So since the daily supply is in control, shorts are actually still pretty good. This set and forget trade has already taken place, right? That trade, that move has already happened. So what we want to do now, if you are bearish, is to simply wait for this trend line to be removed. If that trend line is removed and we have a supply zone above, that will be our trade to the downside if we get that confirmation. That is confirmation trading. If you are bullish, you say, absolutely no way, Kevin, we are going to go up right now. That daily supply is going to break, whatever. If you're bullish, as long as this trend line's holding, 15-minute time frame longs are going to be good. If we throw a channel tool on it, it is actually looking pretty decent right now as we are sitting just below the 50% mark. So as long as we're below the 50% mark, you could justify looking for longs on a 50-minute chart. We have to be careful though, because we do have higher time frame supply and control, guys. We got to be very, very mindful of that. So if you're going to get in long, you need to be aggressive with trade management. Don't look for a 5-to-1 trade. 1-to-1, 1-to-2. Move your stop to break even. Whatever you got to do. Don't get greedy. So that is our other option for longs, to trade along with this trend line on the day trading timeframes. And if you are a swing trader, if we break that supply, any demand there, that will be our pullback entry for a long trade on the USDJPY. All right, on to the forecast for the British pound. We will do a full top-down approach here. On the weekly time frame, we have this trend line. This trend line is attached from here to here. This is simply a reaction off of this trend line. So we could see bulls start to pick price up again based off of that trend line. On the daily chart, pretty interesting in my opinion, as we have a pretty good area of demand down below in the daily chart at 1.32. If you notice, we didn't quite actually hit this zone, so I still think we have room to the downside to fall on the British pound. So the highest odds situations for longs would be to wait for this daily demand to be hit and look for confirmation trades. If you don't know what confirmation trading is and you're new to my channel, I have 3 full courses that are over an hour and a half long on my channel that you guys definitely need to watch. So that's what we should be doing inside of that daily area of demand. As far as trading the pound goes now, we have a couple options here. On the 4-hour chart, let's throw a channel tool on this trend line. And the good news is we have finally came close to this 50% mark. We're actually kind of trading below it. Sorry, above it. We were trading much, much below it here for quite a while. So trading the pound was very tricky, especially on the day trading timeframes. I wasn't really seeing a whole lot of setups. I was telling the members I wouldn't really be trading the pound right now as we are down here. But the good news is we are now trading above the 50% mark of this channel. So as long as this trend line's holding and we're sitting above the 50% mark, shorts on a 15-minute time frame are going to be good. If you are bullish and you are a swing trader on the British pound, what we want to be doing, the highest odds situation would be to wait for that daily demand down below to be hit. But let's say we don't hit it and we push up, break that trend line. If there's a 4-hour demand zone there, that will be our high odds situation for a long trade, considering the trend line is in control on the weekly chart. So all going to revolve around that 4-hour trend line, in my opinion. But look at the 1-hour chart here. Actually, we did just peak above that high. So we actually have a 1-hour trend line to the upside now. We didn't have that earlier when I checked. So a nice little trend line here to the upside, definitely a bullish sign. If we throw a channel tool on it, this trend line is a little horizontal. We're sitting above the 50% mark. So I think waiting for below the 50% mark, if you were bullish, you could be looking for longs on a 5-minute chart. I think that's pretty reasonable in my opinion. But again, what is stronger than a 1-hour trend line to the upside? Well, a 4-hour downward trend line to the downside, that is stronger. So we could definitely see this thing start to turn around. We kind of have a battle of two trend lines right now on the British pound. And again, the weekly trend line is in control, so we could see price go up. But obviously, we could see price go down because we have that daily demand in control. So you can see when you use higher time frame, multiple time frame analysis, it does get tricky, but trust me, it's extremely important. Any of the members in my group can comment down below saying how important it is. They definitely will attest to that. So if you're bearish, that is our 4-hour trend line we want to be trading to the downside. If you're bullish, that is our 1-hour trend line we want to be trading to the upside. And then if you're a swing trader, removing that trend line, demand zone there would be high odds, or waiting for daily demand down below to look for longs would be the higher odds situation. On to the forecast for the USDCAD here, the country I am from. Let me know where you guys are from in the comments down below. So we do have this weekly demand in control. I thought we would be seeing a pullback up to this weekly trend line to the downside, but obviously massive move to the downside here on the USDCAD. And why did we get that? Was it the news? Was it something the Prime Minister said? No, in my opinion, we got to move to the downside because this trend line was in control, right? The trend line is drawn from here to here. That is a reaction off of our perfectly drawn trend line. Unlike the trade, I'm just kidding. Anyways, a little bit of a call out there. But anyways, I just want to make a joke. Just because some member made a comment like that before, and I thought that was funny. So this trend line came in control here on the daily time frame, and we pushed down. Properly drawn trend line with lower lows. And that trend line came in control, and now we are pushing back down. This demand zone down below is very tested. Two tests already. So I think we could break that zone if we do, in fact, push to the downside, continuing to the downside on the USDCAD. On the 4-hour chart, how will we be trading this? Well, we do have a 4-hour trend line to the downside. And as long as this trend line's holding, we could be looking for shorts on a 15-minute time frame. If we throw a channel tool on this, let's take a look. We are definitely overextended. I didn't even need to put a channel tool on this to know that. It's more of just a visual aid for you guys. So we're actually trading below the 50% or below the channel. So if you want to trade short on a 15-minute chart, we want to be waiting for above the 50% channel, above the 50% mark on the channel, closer to that trend line for 15-minute time frame shorts. I think that would be definitely a much safer option. I'm not really seeing a whole lot of zones here on the USD-CAD. On the 1-hour chart, so I drew this zone on Thursday night, and we did get somewhat of a small move off of this zone. And that was actually a zone that pretty much failed pretty easily. So just wanted to be transparent here and point out that this was a zone I called out and it failed. So we take losses here, okay? I'm not going to pretend like every trade's a winner. We take losses, and that was a losing trade there as far as my callouts go. And one of the members actually caught a long trade in here. I'm not 100% sure where his entry is. Obviously, it was on a lower time frame. Nice trade to the upside, so congrats to that member there. Got out before the move to the downside here. So we're very overextended. I mean, trading in short right now, not the best concept based off of this trend line here. We do have a 1-hour supply zone above with liquidity before. So if we do really start to push up, I would like to see another reaction off of this resistance to show me that there are stop losses here. Then I think that supply 1.37 could be good for a short trade. But obviously that's pretty far away. But just saying, if we do see the USD-CAD push up this week, that will be our supply zone for a short trade. So for now, on the USD-CAD, we're monitoring that 1-hour supply, this 4-hour trend line to the downside, but we want to be waiting for a pullback to trade short near the trend line rather than chasing price down below. And if you guys do want help with taking losses like this, make sure you check out my podcast, the Stoic Trading Psychology Podcast, available anywhere you get your podcasts. We talk about taking losses. We talk about win streaks. We talk about everything. Check it out. It's definitely going to help you with your trading psychology. On to the forecast for the Aussie US dollar. The weekly supply was removed, which has given us weekly demand at 0.674. The big question now is, will we be pulling back down to that weekly demand? Let me know in the comments down below what you think. It is definitely quite possible. On the daily chart, we are clearly seeing some sort of movement to the downside here as we have contacted a pretty old daily supply zone. I'm not even going to zoom back all the way, but pretty old daily supply zone in control. We are clearly seeing a move back to that trend line. So we could still see the Aussie pull back quite a bit more as we are very, very overextended here. And that is why I think we are starting to see a move to the downside. As far as trading it goes, we caught that beautiful 4-hour supply liquidity trap here before. What a trade. I personally didn't catch the entire move, But again, this trade was called out before it took place in the daily market breakdown video, as you can see on the screen now. So that trade, beautiful trade, already called out before. So I'm not really seeing much on the 4-hour chart now, but I will say if we do break that 4-hour supply, any 4-hour demand there would be a very positive, very good demand zone, because we've already seen proven supply and control up here. So if we remove that proven supply, that would be a pretty bullish sign, and any demand there would be a pretty good trading setup. So as far as the lower time frames go, let's take a look here. We're basically just basing out here. It's a pretty large range. I am not really seeing a whole lot. What I will say is if we do break that low, we will have some sort of trend line here, and then that trend line could be used for our guide for 5-minute time frame shorts. We need a lower low for a trend line. If you don't have lower lows for your trend lines, you're just drawing random lines on your charts like somebody I know who I mentioned earlier. So we need that lower low. If you are bullish, we could be waiting for that high to be removed. That will give us a trend to the upside. However, we won't really have a trend line because I'm not going to draw basically a horizontal trend line. That doesn't really make much sense. So I do prefer the move to the downside for shorts, because at least then we will have a trend line to the downside. So for now, basically waiting, again, the better range we want to see broken is that range and that range. Oops, down below here. Those would be the better highs and lows to be removed. But for now, I'm really not seeing anything on the Aussie US dollar, guys. Really no trends. The 4-hour supply zone trade has already worked out. So that trade has been called out before. Not really seeing too much as far as the Aussie US dollar goes right now. Moving on to the USDCHF. Just barely missed our daily supply at 0.788. So if we do pull back up, I still think we will see somewhat a move to the downside here, and then most likely end up breaking it. So just barely missed. I still think we could be pulling up though on the Swiss, guys. It's definitely quite possible. As far as trading the Swiss goes now, we do have a nice 1-hour trend line to the downside. The channel tool will definitely show us that we are overextended, but I want to show you guys on the charts to show you we are below the 50% mark. It's not too bad, but I do prefer waiting above that 50% mark near the trend line to look for shorts on a 5-minute chart. And the beautiful thing about that is there's tons of profit margins. So let's say you get a nice little short near the trend line. Let's go ahead and throw a risk reward tool on it. Wider stop just to be safe. Profit margin is a 3-to-1 trade, pretty much down to the nearest 1-hour demand at 0.77. So there is profit margin to the downside if you want to trade short. But again, I would rather wait above that 50% mark of the channel and near that trend line to do so. As far as a 1-hour chart goes, we have a level on top of level here. They're both pretty decent. This one, in my opinion, is just a little bit better because of the move away and the fact that I removed the trend line and supply. So I think that will be our nearest entry for a long trade at 0.77. If that one breaks, we have a zone down below as well that we could try out at 0.769. And look, guys, again, people ask me, I'm sure I'll get a comment, which one should I trade? Which one should I trade? Listen very, very carefully. Both of these zones are pretty decent. To pick one is very difficult. So you either need to pick one, whether it's that one, and trade it. And like, let's say we lose and you don't trade this one and that one's a winner. You have to be okay with that. Let's say you trade both. You want to trade both and both of them fail. You have to be okay with down 2%. And down a 2% drawdown is nothing, okay? You have to be fine with that. Or what you could do is be more aggressive with trade management off this one, meaning 1-to-1, and then less aggressive with trade management off of that one because it is the zone at the extreme. That is another option. There's so many options here. You either need to pick one, trade both, don't trade any of them, and you have to be okay with getting a drawdown. And what could also happen is you trade this one, it's a loss, and then you have a plan to trade that one, and it's a winner, 2-to-1, 3-to-1 trade. Now you're down 1% with that zone, and then you make 2% here, you're up 1%. Or maybe you get a 3-to-1, you're up 2%, right? There's so many options here. Just want to be realistic with you guys. You have to be okay with taking 2 losses in a row. Happens to me all the time. So you have to be okay with that if you want to be a trader. Couple good demand zones down below. And if you are bearish, and if you're a swing trader, we have a very, very good supply zone above, and it's above this liquidity as well. There's 3 reasons I like this supply. Let's go ahead and zoom in on the zone really quick. You can see basing is good. The initial move away is very good and explosive, and the overall move away is fantastic as well. That is one reason I like the zone. The other reason I like the zone is we have a resistance before the zone, also known as liquidity. So I would like to see another reaction off of that resistance, proving that there's stop losses into our supply zone. And that would be a higher odds situation if we can get another reaction off of that liquidity. And the third reason I like this supply zone is it's inside of that daily supply I was talking about earlier. So it's a pretty high odds situation. And again, talking about psychology, you have to be okay with that losing. It could be the best trading setup ever, and it could just blow right through based off of a Trump tweet or whatever. You have to be okay with that, but that will be our supply zone for a short trade at 0.789 on the USD Swiss. Moving on to crude oil. We all know what happened here in crude oil. Insane push up. I mean, predictable if you knew that what was going to happen, but you know, when this happens, we just see zones blast right through, and the fundamentals completely take over the technicals here. And again, I'm not a big fundamental analysis guy at all. It's really just a huge trend of 2025. But you know, nobody could have predicted this move on that exact day. It's really, it happened after the fact. We are right into weekly supply that's already been tested multiple times. So I do think we will be breaking this supply zone. I want to be very clear. I don't love the idea of trading oil right now. It's just way too aggressive to be trading it. Nope, like these markets are absolutely crazy. So my forecast for crude oil is to completely stay away. Last but not least, the Bitcoin forecast. You can see we have removed this weekly area of demand. More importantly, these dotted lines represent a monthly demand. So that is what's in control, monthly demand. That is why I think we could easily see a push all the way up to 104, 141 to this base drop weekly supply zone. We also just created a new supply zone right here. Really, the supply zone should be here because that's the explosive move away, but we're going to tighten it up in this situation. I don't love doing this, but sometimes you have to. I don't love that wick there, but that is where I think our next stop could be. Ultimately, if we're going to get a massive move on Bitcoin, I think that is going to be the supply zone that does it at 104, 141. That's a weekly chart, though. I know it's a higher time frame. Most people aren't looking at that. So we can go down to the lower time frames and see what is taking place. Not really a whole lot. So I don't really do analysis on Bitcoin every day, but we did have a supply there. And then that left us with a demand zone there. Anybody who's a member can attest that that is how our chain analysis is done. And then we had a trend line here. So I am doing this a little bit live here, so forgive me. That was our trend line. That trend line was removed, and that trend line was removed by this area of supply. This is our chain analysis. This is what we go over every Sunday in the Diamond Members Zoom session. So now we have our 4-hour supply at 70,233. I think we could see a short move off that zone. Again, since the higher time frame macro demands are in control, I wouldn't be looking for a massive short trade. I'll be honest with you. So I think 1-to-1 aggressive trade management off that supply could be good. And if we remove it, any demand there would be good for a potential long trade as well on Bitcoin. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.